Start with the money you see every day, your payslip. You might notice that what you earn and what lands in your bank account are two different numbers. That gap is taxes, the price we all pay for living in a functioning society. Taxes fund everything from roads to schools, and while they can seem like a burden, they're also the backbone of civilization. There are different types: income tax on what you earn, sales tax on what you spend, and capital gains tax on your investment. Social Security and health contributions are also deducted, acting as a safety net for retirement and healthcare. Understanding these deductions isn't just about numbers, it's about seeing how you fit into the bigger financial system. And remember, your credit score isn't about how much money you have, it's about how much lenders trust you to pay them back. Even with no debt, a lack of credit history can hurt your score, but knowing the rules lets you play the game to your advantage. Now let's zoom out to the rules that shape your financial world. Banks aren't just vaults, they're matchmakers connecting savers and borrowers. Through fractional reserve banking, your deposits are lent out, not just stored. Banks profit by lending your money at higher rates than they pay you in interest. Why use banks? For convenience, safety, and sometimes a little reward. But the real game changer is interest. When you borrow, interest is the cost of using someone else's money. If you save or invest, it's your reward for patience. Compound interest can work for or against you. Miss a credit card payment and debt snowballs, but invest early and your money can multiply over time. Investing, whether in stocks, bonds, funds, or real estate, is about making your money work for you. The biggest risk isn't losing money, but not investing at all and letting inflation quietly erode your future. Zoom out even further to the forces that shape the entire economy. Inflation is when your money buys less than before. Think of paying more for a half-empty bag of crisps. It's caused by too much money chasing too few goods, supply shocks, or even just the expectation that prices will rise. A little inflation is normal, but when it spikes, governments raise interest rates to cool things down. Sometimes the economy shrinks for months. This is a recession. Jobs disappear, spending drops, and businesses tighten their belts. But recessions are resets, not the end. Eventually, recovery comes and growth resumes. All of this is built on a shared belief. Money itself is a social construct. It only works because we all agree it does. Governments print it, central banks manage it, and we use it to trade value. Too much money causes inflation, too little, and the economy stalls. Ultimately, the system runs on trust. The heart of it all, wealth is about value and time. Gold is valuable because we agree it is. The same goes for brands, technology, and even digital currencies. If you can create something people want, you can build wealth. But the most powerful asset isn't gold or stocks, it's time. Almost everyone starts with it, and those who let their investments grow over decades harness the true magic of compounding. Wealth isn't built overnight, it's the result of patience, value creation, and understanding how the system works. The real secret? Use the system, don't fight it. Give your money time to grow, focus on creating value, and remember, the financial world is built on trust and collective belief. That's the ultimate lesson of modern finance.